If you died tomorrow, could your family find your money? Your bank accounts, investments, passwords, and insurance may be harder to access than you think. What really happens to your money after you die? Let's find out.
A single phone call. I'm sorry, your husband passed away. In less than 3 seconds, her entire world shatters. But while the emotional weight is paralyzing, a silent, invisible mechanism is already turning behind the scenes. Within hours, the mortgage is still due. The utility servers don't check for death certificates before sending bills. And when she reaches for his phone to find out how to pay them, she realizes the bank accounts are frozen and the passwords are missing. The financial foundation they spent decades building together has vanished behind an encrypted wall. Most people think the real tragedy of death is the loss itself. But for many modern families, the financial nightmare doesn't start at the funeral. It starts the very next morning. It is time to secure your legacy. By utilizing tools like Apple Legacy Contact and 1Password Emergency Access, you ensure your family isn't locked out. These systems work for you when you cannot. It takes less than 10 minutes to set up a digital vault. This simple step saves your loved ones from years of legal struggle and financial uncertainty. Don't leave your family in the dark. Secure your financial future and protect your digital assets today. Your legacy deserves to be accessible. Secure your future in 10 minutes. Start your digital succession plan now and ensure peace of mind for those you love most. Welcome to Wealth Tech Simple, where we make personal finance and investing crystal clear. Subscribe and start building your future today. Today, we are asking the single most uncomfortable question in personal finance. A question that 95% of people deliberately avoid until it is too late. If you died tonight, would your family actually know where your money is? And more importantly, could they access it within 10 minutes? Think about your current financial footprint. It's no longer sitting in a leather ledger in your top desk drawer. Your wealth is digital. It's scattered across checking accounts, credit platforms, investment brokerages, crypto wallets, online businesses, and third-party payment rails like PayPal. If someone asked your spouse or your oldest child right now to answer these 3 questions, could they? Number 1. Where is every single account located? Number 2. How do they log in without triggering a security freeze? And number 3. Who legally inherits it? If you can't answer that confidently right now, you are leaving behind a digital minefield. And pay close attention, because there is one specific asset that families forget to claim more than any other. We'll get to exactly what that is in a minute. Let's look at the data. What actually happens in the first 72 hours after an unexpected tragedy occurs? Let's break down the timeline of a modern digital lockout. Day 1 is reserved for pure grief. The family is calling relatives, coordinating arrangements, and dealing with immediate emotional shock. They aren't thinking about money, and they shouldn't have to. But look at Day 2. The automated algorithms that run our society don't stop for grief. The recurring subscriptions pull, the pre-scheduled car payment processes, the credit card interest accrues, the bills continue exactly as scheduled. By Day 3, the immediate logistical questions begin to collide with reality. Where is the mortgage paid from? Which bank holds the primary cash buffer? What life insurance policies exist to protect them, and where are the policy numbers? This is where the structural breakdown happens. Write this down or commit it to memory, because it's the core rule of modern fintech. Your money doesn't disappear. Access to it does. Most people carry a massive, dangerous assumption. They tell themselves, it's fine. If anything happens to me, my spouse can just walk into the branch, pull up our banking app, and withdraw the cash to cover our lives. That is completely wrong. Let's look at how the banking architecture actually treats an individual account versus a joint account upon death. If your primary checking or high-yield savings account is an individual account, meaning only your name is on the signature card, the moment the bank is legally notified of your passing, that account is instant lockdown. The bank freezing mechanism initiates. No app login, no debit card swipes, no automatic transfers. Access is completely restricted. The funds are routed into the formal estate administration and probate process, which can lock up your cash buffer for months, leaving your family stranded without daily operating capital. A joint account with rights of survivorship, however, typically allows the surviving owner to maintain continuous, frictionless access to the funds. If you are keeping the majority of your family's emergency vault in a single owner account that your spouse cannot legally touch tomorrow, you are voluntarily creating a secondary crisis. Review your signature cards today to ensure financial continuity. The problem goes far deeper than traditional banks. Modern wealth is completely digital, and digital assets are guarded by ironclad cryptographic walls. Think about your daily operational footprint: online portals, merchant processors like PayPal, and subscription revenue streams, YouTube income dashboards, Amazon seller accounts, and even tens of thousands of dollars in unredeemed airline or credit card reward points. Now ask yourself, what happens if nobody knows your master passwords or your hardware bypass keys? If your spouse tries to guess your phone passcode or your main email login, modern security protocols will treat it as a cyber attack. After a few failed attempts, the device wipes or locks down completely. Two-factor authentication codes get sent to a device they can't unlock. This single password problem forces grieving families to spend months navigating corporate legal departments and submitting death certificates. They often end up paying attorneys just to gain access to their own livelihood. In the worst cases, those digital assets are completely forgotten or abandoned forever, dissolving into the digital ether. While your family is locked out of your assets, something else is happening in the dark. The cash drains are running wide open. This is what we call the silent money leak after death. When you pass away, your active subscriptions don't automatically cancel. The software platforms, cloud memberships, streaming giants, premium text tools, and automated family phone plans don't know you're gone. They operate on programmatic auto-renewals. Most people focus entirely on what they own, their gross assets. But very few stop to analyze what keeps aggressively charging their accounts long after they're gone. If your family doesn't have a map of every active recurring line item, corporate systems will continue to bleed your frozen accounts dry, $20, $50, and $100 at a time, month after month. Audit your charges, assign an executor, and set alert triggers today to protect your legacy. Now let's address the massive asset I teased earlier. This is one of the single biggest tragedies in modern personal finance. And it happens to thousands of families every year. Millions of dollars in insurance benefits go completely unclaimed, simply because the family never knew the policy existed. Think about it, you might have a private life insurance policy set up years ago, an employer-sponsored group benefit plan, or a specific survivor clause inside your corporate pension framework. But if those documents are buried inside an unmapped online portal, or linked to an old corporate email address your family can't access, who is going to notify them? The insurance company isn't tracking obituaries to actively distribute millions of dollars. If no one steps forward with the policy number and proper claim forms, that money sits locked in state registries indefinitely. I'll ask you again, would your family know exactly where to locate your policy numbers and insurance point of contact tomorrow morning? If not, you are actively paying premiums for a benefit they may never see. If you hold any decentralized assets, the stakes are absolute. Crypto is the ultimate inheritance problem. By design, networks like Bitcoin and Ethereum operate without central authorities. There is no customer support line to call. There is no forgot password link for a decentralized hardware ledger or a private non-custodial wallet. If you are the only person who knows your 12-word recovery seed phrase, the exact location of your hardware device, or the operational PIN to bypass its internal security encryption, the moment you pass away, those assets don't just become inaccessible. They are permanently erased from human reach. Millions of dollars in multi-generational wealth are completely vaporized every single year because creators and investors built absolute security defenses against external hackers, but forgot to build an internal retrieval pathway for the people they love. But here is where the story shifts. This entire financial disaster is completely preventable. And the solution doesn't require thousands of dollars in legal retainers or a lifetime of manual tracking. It takes less than 15 minutes to set up using our signature channel framework, the Digital Vault. A digital vault is not a complex, hyper-vulnerable cloud folder where you store your actual plain-text master passwords that would be a security risk. Instead, a true digital vault is your family's financial command center. It is a highly secure, offline or encrypted master blueprint. It turns absolute chaos into a clear, structured plan. It tells your family exactly where every bank account is located. It lists active insurance policies with their corresponding claim numbers, inventories your digital assets, and outlines the precise recovery methods. These emergency access procedures are required to keep their lives moving forward without friction. The encrypted master blueprint ensures your legacy is protected and your family is always prepared. Let's build your family protection blueprint right now. Take out your phone, screenshot this screen, and commit to completing this 15-minute triage checklist this weekend. Step number 1. List every active financial account you own. Do not write down the passwords, just identify the financial institutions so your family knows where the capital lives. Step number 2. Verify your beneficiaries. Ensure your joint accounts, retirement plans, and investment brokerages have active transfer on death or payable on death clauses attached to them. This completely bypasses the grueling estate probate process. Step number 3. Record your active insurance details. List the policy numbers, carrier contacts, and employer group benefits. Step number 4. Outline your device recovery procedures. Explain exactly where your master hardware keys or password manager recovery phrases are physically secured. And step number 5. Lock this entire framework inside your central digital vault, and give your spouse, partner, or trusted executor the location instructions today. At the end of the day, wealth building isn't just about optimizing asset yield curves, accumulating investments, or mastering fintech tools. True financial freedom is about structural defense. The greatest financial gift you can leave behind isn't just the money, it's the absolute clarity, security, and peace of mind to find it. If you died tomorrow, would they know what to do? Take 15 minutes this weekend. Stop the manual guessing games, build your defense, and protect what you are building. If you want more tech-driven, practical wealth playbooks designed to safeguard your family's future, hit that subscribe button right now. Drop a comment below with Vault to show your commitment, and click on this next video where I break down automated wealth architecture. Let's build that portfolio securely. I'll see you over there. Thank you so much for watching. Click here to keep learning and leveling up. Don't forget to subscribe to join our community. Let's build your financial freedom together.